Hello, hello, hello. Welcome to Money with James. So when is a good time to buy the stock market? First, nobody knows the answer to this question. Of course, experts have more ways to win than beginners, meaning experience and knowledge will increase your chances of being right. But the key point is nobody can predict the future. And if you can't predict the future, then you can't guarantee 100% of the time to know the answer of when precisely to buy the market. Which is why the famous phrase is it's not about timing the market, it's about time in the market. Therefore, get started. So what am I going to cover in this video? A few key points to consider to answer the question. Your time frame, as I've mentioned before. Buying for 5 minutes is totally different to buying for 5 years. Your thesis. Why are you opening this position? How likely are you to be right over the time frame you've chosen? Third, final point, the current price and therefore fundamental value of the asset right now. So that's the summary, but please stick around and I'll share some of my experience and expand on all of these points. Firstly, I know YouTube and Instagram and TikTok all try and tell you about the latest sexy way to make $1 million in 3 seconds doing next to nothing. But sadly, I need to burst that bubble. Boring is what will make you rich. Meaning consistent investing with a tried and tested prudent long-term strategy is the highest probability strategy that will get your wealth to grow over time. And time is your biggest ally on this journey. So start early and invest often. Now, I know this may be not what most of you want to hear, but it's been proven time and time again. Stick to the basics. Put at least 80, 90%, if not 100% of your capital investing this way and stack the odds in your favor. That's the best advice you're going to get. Now, outside of that, if you want to put much more risk on with crypto or other things and put 5 or 10% of your capital and maybe strike it rich, then go right ahead. But just know it's the lowest probability strategy. It doesn't mean it won't work. It just means if you do that, the chance of it working is not quite lottery ticket long odds, but it's getting into the low odds category, right? So do what works. That's what I'm hoping to do here with this channel, be a voice of reason and tell you what works rather than tell you what doesn't work but full of hype. Sorry, not sorry. Now, of course, when I say boring, I don't mean put it in the bank or worse, hide it under your mattress. If you've watched my first couple of videos, you will see I'm a big supporter of taking calculated risk. You must give your little money soldiers a chance to go out and work hard for you and bring back more money soldiers. This, in my opinion, means stocks and real estate. Today's video, though, I'm just focused on stocks. I will get to real estate another time. Firstly, your time frame. Buying for 5 minutes is totally different to buying for 5 years. If you're planning on being a day trader and investing for short time frames like 5 minutes or otherwise, then good luck. It's a tough emotional journey. When I started work as a professional day trader on one of the biggest trading floors in the world, my boss, who had been doing it for 20 years at the time, said to me, if you can be right more than 60% of the time, you'll be fine. And if you can be right more than 70% of the time, you'll be one of the greats. So this means when you dissect it and unpack it a little, you'll be wrong 30 to 40% of the time to be great at your job. For most people, this level of constant failure is soul destroying. It's a truly hard concept to embrace, but that's what it takes. And most traders burned out and didn't make it because handling that failure constantly, day in, day out, is really hard to take. I'll create a video at some point about day trading to give you some inside how it works, what you should be thinking about, etc. But it's the emotional side of day trading is the hardest part. Not necessarily, reading the charts and all of the various parts that go into that, but literally handling the failure, day in, day out, one day up this much, next day down that much. It's tough.
Emotional, damn it!
Whereas investing for the long term, say 5 years, requires a totally different approach. Like I suggested in my second video, it can be as simple as investing in the S&P 500 index tracker. I'll try to add a link to that video here if I can. Or it can be as complex as understanding the fundamental value and long-term vision of company management on a specific stock and investing in that, which I will elaborate on in another video. Second key point, your thesis. Why are you opening this position? How likely are you to be right over your desired time frame? You need to ask yourself these questions and develop your critical thinking engine to get better at understanding the key drivers of a stock or a market over the time frame you've chosen. For most, this process is quite stressful, and therefore why I suggested just buy the S&P 500 index tracker and invest in it regularly. That's your step one. That's your time in the market. That's your start now. As the famous phrase goes, it's not timing the market, it's time in the market. So get started with that kind of strategy and then add all of the complexity and nuances later, which hopefully I can help teach you about, best I understand anyway, because nobody really knows. It's a game where you only increase probability. You're never right and wrong. It's a tough game. So, thirdly, final point, the current price and therefore fundamental value of the asset at that moment. This is truly a key point and one of the hardest parts for most outsiders to get their head around, but I'm going to try and break it down simply over time so that you kind of understand what's necessary and how it all fits together. But largely, if you were to buy a stock or even the S&P 500, so the entire, let's say, US market and US economy is kind of what it's supposed to be a benchmark for, after it has become fully valued, or perhaps even overly valued, relative to its earnings for the current or future period, then you increase your chances, because it's a chance game, it's a probability game, of not making such a great return for the coming 6 to 12 months. And you also increase your chances of seeing paper losses in the near future. None of this truly matters though, assuming your thesis and your time frame are still intact. So, let's say your thesis and your time frame is you expect the global economy and the US market to do well over the long term. And time tested and true, that thesis holds. Then stay invested in long term in the S&P 500 through an index tracker. If the market sells off for some random catastrophe like we saw last week, with the Nikkei down 12-13% and weaker US jobs data clouding up everything, then buy more as your thesis and time frame have not changed. And if we try and focus on keep it simple, that's it. Stick invested and stick to your thesis. Now, of course, over time, we'll go into the details. So in summary, the best time to buy is now, as time in the market is far more important than timing the market. Of course, like I said, it does come down to when you have the capital to invest. Secondly, when you've decided on the exact strategy for investing. But as I've tried to lay out, keep it simple. Index tracker, boom, that's it. Get started. And finally, you do need to factor in your time frame when you're going to need that capital back, because you can be unlucky. So you need to factor in all of these things, but largely get in there, get started. I hope I've helped answer the questions. There are far more nuances you can consider under each of the three categories I've listed today: your time frame, your thesis, and the current price / fundamental value of the asset right now. But more videos to come. So I will help go into those details for those that want to consider more things. Although, as I have said, getting started, time in the market, taking some control is the 80% in terms of the 80-20 rule that people throw around. But don't worry, I'll get into the details over time. More videos to come. Ideally, just get started. Get your account set up. Consider throwing the smallest amount into an S&P tracker. That gets your foot in the door and you're started on the journey, and then build from there. So thanks again for watching. Please like, subscribe, comment, all that good stuff. I'll do my best to respond to questions and comments. And I hope to see you all again soon.